Series 4 of the 50 Faces podcast is sponsored by Baillie Gifford. Baillie Gifford is a long-term investment manager dedicated to discovering the innovations and change makers that deliver exceptional growth opportunities for its clients.
I got a number of letters. I got one from a young man named Edgar, and he wrote me and he said, "You probably think this is strange, but your 45-minute visit has changed my life." And he said, "It has given me something to strive for. I now want to go to college. I want to study finance." And he said, "No adult has ever shown that they cared, especially for kids like me. People don't do that." And that phrase that he said, especially for kids like me, just would not leave my head.
I'm Aoife Devitt, and welcome to the 50 Faces podcast, a podcast committed to revealing the richness and diversity of the world of investment by focusing on its people and their stories. I'm joined today by James Fletcher, who's the founder of Ethos Investment Management based in Salt Lake City. He's over 19 years of investing in emerging markets and was previously director and senior portfolio manager of the $1 billion EM Small and Mid Cap Fund at APG Asset Management. He's also the founder of Young Investors Society. Young Investors Society has become a leading global financial literacy organization teaching financial literacy and long-term investment skills to high school students in over 1,000 high schools across the world. Welcome, James. Thanks for joining me today.
Well, thanks, Ethan. And such an honor to be on the podcast. And thank you for having me.
Well, it was great to meet you some few months ago in Salt Lake City.
Yeah.
And certainly I've been following your adventures on LinkedIn ever since. And I think in keeping with any emerging markets manager, your life is filled with adventure. Can we start with your background and career journey, where you grew up, what your early interests were, and how you came to enter the world of investing and finance?
Yeah, so I grew up in Northern Virginia, right outside of Washington, D.C. One of my initial memories of investing, when I was 8 years old, my grandpa, he was a scientist actually with NASA, but his hobby was stock market investing. And I still remember he put me on his knee and he showed me his broker statements and the stocks that he was investing in. And he would read the Wall Street Journal with me. And, my grandpa ended up passing away 2 years later. But some of my earliest, most impactful memories was my grandpa talking about the stock market and talking about stocks he was buying and investing. So I think ever since those early days, I've always sort of had that spark of the markets and investing. I went to Brigham Young University in Utah, and I'm a member of the Church of Jesus Christ of Latter-day Saints, LDS Church. And when you're 19 or 20, generally you go serve a mission. And so I was assigned to go serve a mission in Brazil. I lived in Brazil for 2 years. I learned Portuguese. And honestly, that was probably the biggest career turning point for me, even though I was there to do service. But I just fell in love with different cultures and different people and the Brazilian language and the food. And I came back from that missionary experience and I said, I don't really care what I do, but I really want to have international business experience. And I would love to use my Portuguese. And I came back to college, and BYU has a good finance program. So I studied finance, but always focused towards international finance. And then someone said, asset management, investment management is a good career to, get international work experience. And it kind of sparked back to my early days with my grandpa. And I said, oh, that would just be so amazing. So I went for it, got an internship in Boston at an emerging markets fund as a junior, and then got hired. And then it's now my 20th year doing emerging market equities. I travel to 15 countries a year. I meet 300 to 400 management teams, CEOs a year, all across the world. So it has played out exactly what that early advice was. Like, if you want a job that you travel and get to know a little about a lot of things, asset management is a great one, and emerging markets investing has been a great career.
And I'd love to go back before we get into Ethos Asset Management, investment management. I'd love to go back to that missionary experience, because I think there's a lot that you do on a mission, which probably involves a fair bit of rejection, a fair bit of persistence, And certainly a lot of integration is the local culture. And also, I suppose, a perception of the divergence between what's said in the international media and what's actually happening on the ground. So, what kind of insights did you take from that time and what skills that you kind of folded into your professional career?
Yeah, that's so many good points. And you're exactly right. Like that experience living in Brazil for 2 years was life changing for me. And a lot of the reasons were exactly what you said. Like the perception of Brazil as a third world country, the people are suffering because they can't afford automobiles. The reality is, I got there and they had such happiness and such cultural traditions and Brazilian brands like Antarctica Guaraná and Natura cosmetics products. And you just realize that it's not better or worse, US or Brazil. It's just different cultures, different brands, different desires. And then it's sort of that light bulb sort of went off of, hey, I bet that's probably the same in India. And I bet that's the same in China. And that's what I've found over my career is putting yourself in the shoes of consumers in those countries and kind of understanding how a country works and less about who's better or who's not, more about understanding those local cultures has really led to this desire to invest in these countries that are developing, that are maybe early in their growth stage. I love traveling to Korea because you learn so much about the Korean culture and technology. I love traveling to Southeast Asia. You learn so much about businesses and consumer brands and commodity cycles. And so it's just been an amazing journey that the world is very big. And a lot of times there's the home country bias in investing. You've probably heard where 85% of the world's assets are kept within the US borders because 85% of the capital allocation is coming from the United States. But that doesn't mean that there's not amazing companies outside the United States. And that's where we try and bridge the gap. So, emerging markets, I think it may surprise listeners, is 85% of the world's population, but is 60% of the world's GDP and is accounting for 67% of the GDP growth over the past 10 years. So it's not just like, these are small countries. They're driving 2/3 of the economic growth in the world, these countries like India and Korea and China. And so understanding really boots on the ground of what's happening, what are the brands, what are the cultures in these countries. And then, over time, we see more capital being allocated to these countries because their economic footprint justifies capital being allocated to them.
I'd love to dig in a little bit to that emerging markets kind of use case. And maybe we're speaking a lot about bridging the gap. And certainly,
Yeah.
that a lot of what you've said there is probably not well known, as you said, by the general investor base. There has been perhaps probably less enthusiasm around emerging markets in recent years due to underperformance.
Yep.
All these
Yep.
ironies around actually they've been doing quite well with their institutions, with kind of testing those institutions. They're used to the kind of inflation and stability that we were wrestling with a few years ago. All of these things seem to go unnoticed. And just now we have also the tariff gamesmanship playing out, whereby many emerging markets, such as, say, Brazil, India, seem to be takers of quite a dominant US trade policy. So I suppose a lot of issues there to deal with. But could you give us a little bit of the lie of the land as you see it and where you see the opportunity set?
Yeah. So as you said, it's been a tough, decade for emerging markets where they've underperformed U.S. markets and certainly the Magnificent Seven in U.S. large cap growth stocks. But let's not lose fact the previous decade, emerging markets significantly outperformed developed markets. Is it going to go in sort of 10-year cycles? We don't know, but we do see reasons for optimism at this point in the cycle. So if you look big picture at emerging markets, GDP is growing faster than US and developed markets, as I mentioned before, especially driven by Indonesia, India, Southeast Asia, China for a lesser extent, and Korea, Taiwan. But what has not translated, what's been a disappointment for emerging markets in the past 10 years, has been earnings growth has been okay, but it's not been as strong as it should be, and it's lagged developed markets. And then currency. So the stronger US dollar has been a significant headwind to emerging markets. especially because the index is reporting earnings in US dollars, right? And so it's been a constant headwind for 10 years. As you mentioned before, if you look at like inflation differentials between emerging markets and developed markets, actually that gap has closed significantly. A lot of these countries have reduced their long-term inflation numbers, and coming out of COVID, were quite reasonable. There was 2 years where India's inflation was running lower than US inflation. And really, it's the first time in my career in 20 years where India inflation is running lower than US and Indonesian inflation is running lower. So actually, these countries have gotten inflation under control. But what has happened this year? So right now we're in August of 2025. Emerging markets have outperformed, and the dollar has weakened versus these currencies. And then, the question we're getting from clients is, wait, aren't the tariffs a big headwind? Shouldn't they put pressure on the EM currencies and flows to EM? But our opinion is the pendulum had swung so far that the dollar had gotten so strong, and the valuation gap between emerging markets and developed markets had gotten so big that even though we do have some tariff uncertainty this year, EM has been an outperformer. Emerging markets is up roughly 16% year to date. And a good, about half of that outperformance is coming from these EM currencies strengthening against the US dollar. And so is it reasonable that we could be at the start of a cycle where valuations converge a bit more and inflation converges a bit more? We think it's reasonable. And so we actually think it could be an attractive point in the cycle for emerging markets. And then the last one, to my first point, which is growth, earnings growth. I mean, the fact is EM earnings growth has disappointed. There's been pockets of like tech in Taiwan and Korea, which have been very strong performers. India earnings growth has been very strong, but for the most part, it's been slower than US and certainly the Mag 7. But last year, 2024, EM grew faster than developed markets. And expectations for 25-26 is that EM has higher earnings growth as well. So we think if these trends can continue, that valuation gap could be a good period for emerging market outperformance.
I love that. You're already taking us into the unknown, I think, that is less well covered, certainly by the headlines, which seems to maybe often be from a US-centric lens. I'd like to now segue to starting your own firm. What was the motivation behind that, and what was your mission with Ethos?
Yeah, so to go back nearly 2 decades. I started at a great firm called Westwood Global Investments. When I started, there were 5 of us managing a couple $100 million. And because it was small and independently owned, and we all believed in the investment philosophy and the long-term quality focus that we take, it just was so fun. We were all aligned and we were extremely successful. And so from those early days at Westwood Global, for me, it was always a question of when, not if, I would start my own fund and really sort of build a team and a culture around something I truly believed in. And so I was, lucky enough to work at Kayne Anderson Rudnick, which is an incredible institution and incredibly sort of well-trained there, and APG Asset Management, which is an incredible institution as well, and was able to manage, $1.5 billion for their EM small mid-cap fund based in Hong Kong. And all of that sort of built, and the track record of investment allowed me to approach some seed investors and launched Ethos in 2021 with $100 million of assets. And that was a great start. And we've done a couple spin-off funds since then, and it's been fun. The most amazing thing about launching your own fund is picking the small group of employees that you just love working with. You're aligned. There's no corporate bureaucracy. There's no sort of outside. You find, clients that really believe in the mission. For us, we're passionate emerging market investors investing with what we call like a Warren Buffett, lens, where we're focused on high quality businesses on one hand, but also the best management teams and the best cultures or the best company ethos. So that's why we call it Ethos Investment Management. And especially in countries like China, India, Brazil, where it's a little more Wild West and governance is more of an issue and there's more landmines in terms of what could go wrong. We find doing a lot of legwork on company cultures, management teams allow us to invest just with the best of the best. And I'd say that especially pays dividends in emerging markets where all the governance standards are not the same. And we're just trying to find, the best 5 to 6 well-run, best governance companies in every country and invest with them for the next, 10, 20, 30 years.
I love that focus and your reference to the ethos of the companies you invest in and your own ethos as a firm. Given your origins and some of the experience in the small and mid-cap space, how do you frame the opportunity set there today? Is there enough liquidity? Is it quite inefficient and therefore presenting interesting opportunity? One question I wrestle with is we have these large companies in the US where their market cap is now exceeding 3 trillion, 4 trillion in some cases. That would dwarf the entire market cap of a country in some of the coverage area that you have. What is the end game starting to look like here as developed markets just get so large and start to look so beta-like? What's the opportunity set in inefficient markets?
Well, I think it opens up opportunities for inefficiencies and dislocations. As a stock picker, as a active portfolio manager, you're looking for inefficiencies. And I would argue it's harder to find inefficiencies in large cap US growth that have 50 sell side analysts covering it. Whereas we're able to find very good companies trading at 8 times earnings, 7 times earnings in Indonesia and Philippines and India and Brazil that have 25% ROEs and grow earnings 20% a year, and have very similar business models to the leaders in their US counterparts, and yet they're trading at 6, 7 times earnings. And why is that? For the reasons you mentioned, that flows over the past 10 years have followed towards US, large cap stocks. Emerging markets have outperformed. And so if you're going to take assets to an asset class, we've seen outflows out of emerging markets, especially small cap emerging markets or small mid cap emerging markets. And what it's left is, I'd say in some cases, extreme dislocations in valuation. And that's what we think is attractive as long-term active investors. That being said, I think people would be also pleased from an emerging market standpoint that we do have a lot of AI and tech exposure within emerging markets, right? So yes, NVIDIA and Microsoft and Google are wonderful companies. And, I personally think they will continue to be wonderful companies, but they are heavily reliant on Taiwan Semiconductor and Hynix. And we own a lot of those key technology value chain companies in Korea, Taiwan, which are just as large beneficiaries of AI and data centers and proliferation of data. And so the reality is emerging markets are leadership in technology. 82% of the world's semiconductor manufacturing happens in Asia today, right? So it is still the center of a lot of the R&D and a lot of the technology coming out in the world today. So on one hand, in emerging markets, you get these extreme dislocations in valuation because just flows have moved so much to US. On the other hand, we think you can still get some of the best exposure to rising technology trends through this Asia supply chain of semiconductors.
It's a really interesting point. A colleague of mine works on the improvisation on the side, and there's a big concept there of yes and the and. And I think that we often think it's an or in the sense that do I do US investing or emerging markets? Whereas I think this and concept, as you mentioned, investing in emerging markets is not about turning your back on the top 10 large tech stocks. It's about this complementary portfolio with that marginal dollar. Would you want to invest in a concentrated portfolio with that marginal dollar, or invest in some of the subsidiary exposures, which I think that you've made the case very well. Thank you to Baillie Gifford for sponsoring Series 4 of the 2025 50 Faces podcast. I sat down with Matthew Coyle, Client Relationship Director at Baillie Gifford, and asked him to describe the culture at the firm.
So very simply, we put clients first, then our colleagues, then ourselves. And as a private partnership structure, we think this promotes long-termism and stability, which we think is beneficial both for clients and our staff. Our real strength is our people, and we strive to ensure that Baillie Gifford is an engaging and progressive place to work. We do set high standards, but we create a supportive environment. And we often hear that culture is one of the reasons that people look to join us. That's fantastic, but culture does not stand still, and we have to keep working on it every single day. If we get it right, colleagues will be engaged, they'll be energized, and that should lead to great outcomes for our clients.
And now back to the show. I'd love to segue now to some of the other aspects of your profile and this Young Investor Society, which I fully support its mission around financial literacy. I think it's something that we've come to, I think, a little bit too late in terms of recognizing its importance. Can you talk about that and how that grew into a movement that you're interested in?
Yeah, thank you, Ethan, for bringing it up. It's certainly been something I've just done on the side, initially as a fun project or hobby, but it has turned into one of my personal callings, I believe, is to teach especially teenagers about investing in financial literacy. And I think it ties in extremely well to, I know, mission that you feel so passionate about, which is just diversity and inclusion across our asset management industry. And we have certainly seen that firsthand at Young Investor Society. So anyways, just as a background, Young Investor Society, you can sort of view it as the CFA Institute and a DECA or an FBLA, like a high school age club mixed together. So we create sort of the brand name seal of approval, best content curriculum for teaching finance to high school age kids. And then we do it through an after school club format with a lot of competitions and activities. So, I mean, basically how it started, we like to say it started with a letter from a young man named Edgar. So basically what happened is I was volunteering at the stock market game, which is how a lot of high school kids learn about investing. I was living in Southern California at the time, and I would visit, they'd ask me to go visit high schools and, be a guest speaker about the markets and, how we analyze stocks. And one day I went to Roy Ball Academy. It's a inner city school in Los Angeles, predominantly Hispanic. And I remember telling my coworker, I'm going to talk to Roy Ball today about, the stock market. And he's like, well, good luck, teaching them about the stock market. And I got in the classroom and I was just blown away. Like the kids were so smart, so engaged. There's something about stocks. They were doing their, simulated stock portfolio. And I said, what stocks are you buying? There's something about stocks that is fun. It's companies they know. It's competitive. It goes up and down. The kids love. And anyways, I just had an amazing discussion with them. And also I told them about what we do. Like we invest in Mexico and across Latin America. We're looking for people that have diverse backgrounds, that speak Spanish, that have sort of different cultural understandings. And I got a number of letters after that visit, but I got one from a young man named Edgar, and he wrote me and he said, Mr. Fletcher, you probably think this is strange, but your 45-minute visit has changed my life. And he said, it has given me something to strive for. I now want to go to college. I want to study finance. And he said, no adult has ever shown that they cared, especially for kids like me. People don't do that. And that phrase that he said, especially for kids like me, just would not leave my head. And I said, we need to have a program that teaches long-term investing and college preparation the right way, not just a short-term simulated program. And so I went to someone from Merrill Lynch who was retiring. I went to someone from Harvard Business School and someone from Fidelity. And I said, let's put together a program that teaches, CFA style curriculum for high school age kids. And that year, I think I would have 8 to 10 high schoolers over to my living room every Wednesday, and I would just teach them about the stock market, but then I teach them about PE ratios and valuation. And at the end of that year, we did a little stock pitch competition, like a stock research competition. We had 6 schools that competed. And then the next year we had 50 schools, and then 150 schools, and then 300 schools. And then last month, Ethan, we just surpassed 3,000 high schools in 100 countries around the world. So we're serving about 12,000 high school students per year. And it has just snowballed into this amazing community of teenagers that are preparing for finance, preparing for the markets, and all across the world. So it's been amazing. And like I said, we've learned a lot about teams. We've learned a lot about this, of the future of our industry. One is, and this will probably blow you away, but 50% of the kids in Young Investor Society are female, and 50% of the winners are female, right? And so girls are just as excited about investing and just as good at investing, if not better. And yet we look at our industry and probably the ratio is only 10% female or even less, right? So what we're seeing in the early stages is we need to carry on this diversity through, all the way through into careers. And I think our industry is changing. And we also learn that kids like Edgar, like kids that come from low income backgrounds, are just as smart and are just as capable, as long as you sort of give them a chance and give them mentorship and give them a vision to strive for. So anyways, Young Investor Society has become a side calling of mine in addition to the day job. And it's been amazing.
Well, that's fantastic. I'll put a link to that in the show notes. Really remarkable. And what I'm really curious about is how you scale. How do you deliver this message now to the number that you do?
Yeah. So, and again, like Khan Academy had come out a couple of years beforehand. And so we modeled a lot of the sort of delivery on Khan Academy. And anyone can go on and sign up, kids or adults. It's all free. You can sign up and register and start going through. But basically, there's lessons that you can download and print out. There's videos that go along with each lesson. There's activities. And so we really built it so it'd be very scalable. We have over 20 hours of footage of different lessons. And it's everything from budgeting, basic savings, what is a car loan, all the way to advanced discounted cash flow analysis and valuation techniques, right? So we're really bridging everything from personal finance to really advanced college level finance. Yeah, so we built it to be scalable. We have support from corporate, some amazing corporate partners like Bloomberg, Philanthropy, and Goldman Sachs and JP Morgan, who have really helped us scale it so that we can offer our program for free for all teams and teachers and anyone that wants to sign up.
Amazing. Well, what a huge amount of impact that will have. And thank you for your continued passion to seeing that happens. I'd love to go back to some personal reflections now. And I think someone who spent their career in emerging markets is got to, I think, be quite familiar with highs and lows, whether it's the backdrop of markets or sentiment changes, or even just on a personal level. What have been some of the highs and lows of your career so far? And have you learned any lessons from those lows?
Yeah, so we have a phrase in our office: in the end, it's all about people. We analyze numbers so much, but in the end, it all comes down to people, CEOs making decisions, the market following the herd and the sentiment, people that are customers making customer decisions, treating employees well. The highs of my career are really the people. It's the relationships. I have close relationships with CEOs and CFOs from all around the world. And some of those just strategic meetings where you're talking through the long-term business strategy and the values of the company. Like, those are the most precious moments where it's just fun. It's fun to be at the table. It's fun to build relationships with remarkable people from all over the world. The other highs, and same thing with the team. Like, when as a team you come together and you make, a good investment and it does well and you celebrate it as a team. And, there's a company we invested in. It's called Varun Beverages. It's a company in India. They are the Pepsi bottler across India. They have 85% market share of Pepsi distribution across India. And it's just a great business. I first met them at IPO. I met Mr. Jaipuria, who's, their family CEO of the business, and Mr. Raj Gandhi. And basically, I had long experience doing bottlers from Latin America, companies like Arca and FEMSA for Coca-Cola bottling. So we knew the business well. Anyways, we invested early on because we saw, one, the business model was very strong, but two, we just believed in that management team and the culture and their ability to execute. And, when we invested in 2016, it was a $850 million market cap business. Today, it's about a $22 billion business. So it's gone up more than 22x. And I was just in India a couple months ago, and just, Raj, come and he's like, James, you believed in us from the beginning, and we're kind of high-fiving each other. And I was like, no, but you delivered on the business, and they've acquired new territories outside of India into Africa. And same thing with my team. Like, we can just say, like, we saw this early. And if you're only missing 40% of the time, you're doing a great job in investing. So you're always going to have mistakes. We've held on too long, countless times, to businesses that continue to disappoint. You become entrenched with that relationship, and you just had tough times across different markets. I think the key of investing is knowing that if you're going to be wrong 40% of the time, learning how to recognize patterns, move on. You're going to have good years, you're going to have bad years, see the long-term picture. What we do is we chart fundamental earnings and cash flow growth of our businesses, and we chart out over the next 5 years where we expect that to get. And stocks can go up and down over that period, but as long as the company's on track to, essentially, we want our companies to double their earnings every 5 years and double their cash flows. If they're on track for sort of that 15% CAGR growth, and they're still market leaders, then you can ignore some of the stock price ups and downs. So that sort of helps anchor how we're tracking success. But, the reality is, as you alluded to, Ethan, especially in emerging markets, right? Like 10 years ago to say today that, China has been decimated in terms of valuations. Russia is now out of the MSCI index. Argentina is now recovering, has been a very strong performer, as is Turkey as well. Some of these big sort of dislocations in countries and markets are difficult to predict. So we try and own businesses that can do well in any political environment, in any economic environment, because in emerging markets, you never know quite what you're going to get and what the next 5 years will bring.
No truer words ever spoken. I'd love to ask about any mentors, any key people that really had an influence on you, just like you're providing now for these students in the Young Investors Society.
Yeah, and that's one of the reasons why I try and pay it forward, is because of the great mentors that I had in my career. When I was at BYU at college, I approached a portfolio manager of a hedge fund. After a meeting, he spoke at a investor conference, and I said, "Are there any internships available?" And he said, "Well, we don't do internships." But he said, "Actually, if you'll take notes from earnings calls and send me the transcripts, I'll pay you, minimum wage." But he ended up giving me some great mentorship over the next 2 years, really took a chance on me. And then, at Westwood Global, had some amazing mentors across industry-wide, people like Pat Dorsey, who's a great investor, but also an author, and talks about moats and quality. He's sort of taken me under his wing, and he'll sort of commiserate and also give advice every couple months. So, these people, they don't have to give these mentorship, but I've been hugely blessed from it. And so try and pay it forward as well. So we started hiring at Ethos Investment Management. We started hiring associates from emerging markets that are recent graduates that are coming from underprivileged backgrounds. And we've now hired 5 associates, and we're about ready to make 4 more offers. So it'll be 9 associates, and they're across Latin America, Africa, Southeast Asia. I have an amazing team at Ethos that helps mentor them as well and teach them. but we have an advisory board of mentors that doesn't get paid, that just enjoys mentoring these recent college graduates from Africa and Southeast Asia and Brazil and Peru. And so I've seen the power of mentorship. I see it on a daily basis. These associates, for example, we have an associate in Philippines and Nigeria and Peru and Brazil. We basically took them in 6 to 9 months from no finance experience at all and no industry experience at all. 6 to 9 months later, they are doing calls with CFOs. They're doing primary research on companies on the ground. They're doing full financial models. One of the mantras that we live by is talent and hard work is equally distributed across the world, but opportunity is not. And I think the great arbitrage that we still have available is that you can find people that are smart and hardworking, but just don't have an opportunity. We give them an opportunity in Nigeria or in Philippines, and all of a sudden, 6 to 9 months later, they are adding tremendous value to our research process. But it's only through mentorship, and it's only through, I guess, really your mission, Ethan, which is the belief in diversity, the belief that they don't have to come from Ivy League school to do great work. And we really leaned into that, and it's really starting to pay dividends, both for our fund, but also for the impact that we can have.
Well, James, I can't tell you how enjoyable it is to chat about this on a Friday afternoon. It just feels like we've got a kindred spirit here, and that we're both doing what we can in our separate ways. My final question is just to close us out, whether you have any creed or motto to add to some of the wonderful words of wisdom you've already shared here. Anything that you maybe wish you had known yourself as that young student on a mission in Brazil for 2 years, or just something that you've learned to live by now?
Yeah, I'd say something that comes to mind is the book. It's a business book, but it's a life book. It's called How Will You Measure Your Life by Clayton Christensen. For me, when I read that, and I was about 26 years old when I first read it, it really put everything in perspective of how will you measure your life? What is a successful life? What is my calling? What am I supposed to do? I'd say for the first 3-4 years of my career, it was just work nonstop and no balance, and sort of everything was out of whack. And I read that book and I said, yes, work is important, but also relationships are important. My family's important, and legacy is important. And that's actually what sort of led to starting Young Investors Society and volunteering. And as I look back at that, some of the best relationships I've had, both personal and business relationships. And really, honestly, I could never have started Ethos Investment Management had I not cultivated those relationships through Young Investors Society. And so it all kind of works together. But that book, How Will You Measure Your Life, kind of gave me a bit of a roadmap of what I should be focused on and how I would measure success. And it was a lot more about impact, and it was a lot more about relationships than it was about dollars and cents. And that has been transformative for me. So I guess to my younger self, if I could go back, I would say I wish I would have read that book 10 years earlier, like as I was going through college and everything else, because it just ended up shaping so much of my career and life decisions after that.
Wonderful. Well, James, as I said, you are making an impact in so many ways. It was great to geek out on some of the emerging markets insights here.
You are too.
And thank you also for paying it forward as you do, well into the next generation with the high school outreach. Thank you for coming here and sharing your insights with us.
Thank you, Ethan.
I'm Ethan Devitt. Thank you for listening to the 50 Faces podcast. If you liked what you heard and would like to tune in to hear more inspiring investors and their personal journeys, please subscribe on Apple Podcasts or wherever you get your podcasts.
This podcast is for informational purposes only and should not be construed as investment advice, and all views are personal and should not be attributed to the organizations and affiliations of the host or any guest.